Hi, everyone. I want to share with you the stock market recommendations from the biggest banks, Deutsche Bank, BlackRock, Bank of America, Goldman Sachs, and the like. So that's what I'm going to share with you on this, their 2022 outlook for all of us, basically. But I wanted to, although it's meant really for their private clients, I really wanted to share it with all of us. So let's put up Bank of America first. And what you can see there is, well, first of all, they're expecting, because shipping costs are down, they're expecting inflationary pressures to have reduced somewhat. Now, that's interesting because there's a lot of fear about inflation. If it doesn't come to pass, then interest rates won't rise as quickly as expected, and you'll expect quite a boom for the stock market to continue because it's pricing in more negativity. The Baltic Dry Index, one of those alternative sources of information that people look at, which measures dry bulk shipping costs, has fallen 50%. So supply chain issues are being reduced. Or as I say, when I ask my son if I can have more hugs, and he turns around and says, "Sorry, Daddy, supply chain issues," he's not going to have that excuse going forward in 2022. BlackRock, this is the one out of theirs which caught my eye. Persistent inflation they're seeing. US and Euro inflation, and their expectations are for it to persist. Who's right? Well, it's thanks to people like BlackRock that we will get that headwind, or at least the perception of it, and that expectation of higher interest rates. I suspect interest rates will move up a bit slower than anticipated, and the stock market will continue having a very good year in the year ahead. Okay, Deutsche Bank, this was there. Supply constraints were a major driver of initial inflation surge earlier this year. This stands in sharp contrast to the pre-pandemic mix of inflationary pressures, where the categories only added a relatively small share to monthly inflation profits. Bottom line, well, they seem to be sort of hedging their bets somewhat and sort of saying, well, it's here to stay. Okay, but mixed in with demand pressures, they're obviously on the higher inflation side. What about Goldman Sachs? Well, they say the S&P 500 industry group sensitivity to real rates and break-even inflation. Well, that's the breakdown. So they're sort of again saying, well, we're not quite sure, but this is what happens if we get higher rates. Then these are going to be the most sensitive, outperform when inflation expectations rise. So if we're underestimating inflation, well, the banks will do well. But at the other end, these ones are the ones who outperform when real rates start rising. So if we think our rates aren't going to rise as much as we expect, and then they do rise more than expected, well, you'd expect some of these to then start outperforming over there. Take a pause, take it all in. There's quite a bit in there. I'm not going to gamble on whether or not inflation is going to be bigger than expected, or gamble on whether rates will rise quicker than anticipated. What I'm going to do is make sure in whichever sectors I'm invested in, that the kind of companies that I've got have got high cash flow growth, therefore are resilient to any of these impacts, and also have good share prices relative to their profitability, and their revenue growth is strong as well, and have been consistent outperformers in the recent past as well. So I'm not gambling on expectations, basically, is the bottom line. How about Jefferies? Well, this is market implied inflation forecast. The market appears to be discounting a stagflationary scenario where the economy ultimately buckles under the weight of inflation and rate hikes. That means they think the market's being overly pessimistic. As I said, and I hinted earlier, I think it's being overly pessimistic, and therefore markets will outperform when actually inflation isn't as bad as we expected, and equally rates don't rise as fast either. Okay, JP Morgan, what they're saying is supply demand imbalance produced one of the hottest years for inflation in recent decades, which is why you're seeing a lot of inflation-based exchange traded funds and a lot of money going into it. So it's a marketing dream for the asset managers. And again, I think it's being overdone, but you can see some of the data which they're using over there. Morgan Stanley, our forecast to those are the consensus of economists, as well as the September economic projection of the FOMC 2022 on a quarter by quarter, fourth quarter by fourth quarter basis. We're above consensus, and the FOMC for GDP in line with core PCE and lower on the employment rate. Basically, there's a lot of variety of information out there, is what they're saying. And theirs is just one in the mix. Not really very helpful in many regards. And personally, bottom line, I think we're going to do better than what a lot of these economists are factoring in. UBS, real core good consumption is well above pre-pandemic trend, leading to supply constraints and strong goods price inflation. Yeah, but let's start off with the first part of that sentence. There's a hell of a lot of demand, latent demand. There's a lot of money out there. That means a heck of a lot of profits for companies. Okay, so that's UBS. Again, that bolsters my thesis. It's going to be a good year for stocks. Wells Fargo, this is the best performing asset classes if you get low to moderate inflation, which is, I think, what we're actually going to get. Okay, you're probably going to get mid-cap equities, large-cap equities. I'm largely in large-cap equities. Worst performing, it'll be those. Well, I don't think that's going to happen. Higher than trend inflation. Well, again, you've got mid-caps and small caps. So some of you might think, well, wait a minute, mid-caps are in both categories. We'll just stay in the mid-caps and the small caps. And Alpesh, you're taking too much of a gamble by being large caps. Well, actually, a lot of mine are mid cap as well, right? So that should help. If you want to learn more, go to my campaign for $1million.com. I hope you have a wonderful, 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 exciting year ahead. And you'll get a lot of free information from that website. So go to my campaign for $1million.com to learn a heck of a lot more about investing. Thank you very much, and wishing you a very prosperous 2022. Follow me on my Telegram channel as well through that website, because that'll help make sure your 2022 is more prosperous.